Good evening, ladies and gentlemen. Good day, and welcome to the Q3 FY24 earnings conference call of Network People Services Technologies Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phones. Please note that this conference is being recorded. I now hand the conference over to Mr. Kaushal Shinde from Kirin Advisor. Thank you, and over to you, sir.
Thank you. On behalf of Kirin Advisors, I welcome you all to NPST Ltd Q3 FY24 earnings call. From management side, we have Mr. Deepak Thakur, Chairman and Managing Director, and Mr. Ashish Agarwal, Joint Managing Director. Now I hand over the call to Mr. Deepak Thakur. Over to you, sir.
Thanks, Kaushal. Thanks for the introduction. First of all our shareholders, wish you all a very happy and a progressive new year. We intend to continue the same growth story as we did in 2023 in 2024 as well. I believe that last quarter there was some really good number of shareholders and I really wish them that whatever responsibility you have entrusted in us, we continue to work further on that. So before I declare result, what I will do is I'll structure this call them who have come for the first time, a very short introduction about what exactly we do. Then I will also take you through quick updates of the organization in the last 3 months or, and then let you know about the results and the rationale behind it, how we have grown, and maybe after these 3 we can take Q&A. So just for all to know again that NPST is into payment technology space, where we have been working relentlessly to build the technology processing engine for payments. We provide the solution to banking industry, wherein they can do the real-time payments just like your IMPS, UPI, and the allied services like ODR, online dispute resolution. We have Bharat Bill payment services, and then we also have mobile banking services. So these are some digital products which banks require as on today in order to be digitally present amongst the consumers. And that is what we do. We provide this solution to banks. Beyond this, what we also do is we bridge the gap between banks and fintech by providing the API and the technology solution to fintech on the banking experience that they can get. Now, this is a very unique value proposition which we have brought in the market. By this, what happens is fintechs are able to connect to banking ecosystem, and they are able to derive the value of digital payments for their businesses. So there are companies like payment aggregators, merchant aggregators, those segments where you need a digital payment. They can actually take products and services from us, and they can drive the core value, focus on those areas, and completely outsource the payment requirement to NPST. Now, this is where NPST stands in the industry. Over last 3 months, a lot of updates about the organization, and my team has always ensured to bring those updates regularly to everyone. And there are a few things that I want to touch base on. As a commitment towards continuously building the horizontal stack of the organization by bringing in more and more products, we were able to crack our first deal in Bharat Bill payment solution. So we got our first order in last quarter. This particular deal allows us to enter into a completely new segment. It allows us to now reach out to more banks and give them, solution around both license as well as OPEX model, SaaS-based model. This particular solution is, if you look at Bharat Bill Payment, this is majorly a biller aggregation at the NPCI end, which can be taken as a service by banks and the other institutions, those who are into providing aggregated bill payment services to customers. Now, this is where we get the first entry in the market. At the same time, we have all continued to grow in our API business, wherein we have added more accounts over last 3 months. At the same time, what we have also done is, I think, last EGM, the results are already out. We have got the approval. We have issued bonus shares in the ratio of 2:1, which means 2 new bonus equity shares will be issued for every 1 existing fully paid up equity share of rupees 10 each. At the same time, we have focused on leadership positions in the organization. We have got Mrs. Panchi on board. She comes as an independent director, about 27 years of experience, and she will strengthen the organization's, security as well as the overall technology space at the board level. At the same time, we have got, Mrs. Savita Vashisht, who has joined the board as an executive director. She brings, 2 decades of experience in building businesses in software domain, at the same time, the international presence. Beyond leadership position, we have also got, a lot of recognition from the industry. We were honored by Economic Times MSME Award as the top performing Indian listed SME of the year 2023, and we were also honored by Navbharat for our innovation in fintech space. Now, all this taken together, we have been obviously it has to reflect on the results of the organization. So December end FY24, I'm just reading out my the result that has been declared by the organization. I think it's already there on NSE. For everyone to know, we have been able to grow about 210% year on year, which was just about 10.3 crore in Q3 FY23, as a total income of the organization has gone up to about 32 crore in Q3 FY24. At the same time, it's not just about the revenue, but also when you see the EBITDA and the net margin, our EBITDA has grown by about, from 3.4 crore to about 10.9 crore, which was earlier 33.2%. Now it is about 34.24%. Net profit is something that further reflects the non-linear model of the business, which has grown by about 261%. So it's not just about the revenue, about the EBITDA, but also the net margin. If you look at, it has gone from 1.8 crore to about 6.5 crore from the last year. Our earning per share has gone from 2.8 rupees to about 10.11 rupees. Year on year, 261% growth overall. When we consolidate 9 months results for FY24 versus 9 months FY23, our total revenue has gone from 19.7%. Now this is 3 quarter consolidated, from 19.7 crore to about 85.4 crore. And our EBITDA has gone from 5.7 crore to about 28 crore, which is almost about 400% growth. And our net margin stands at 16.69 crore as against 2.68 crore, last year. Again, I think you should be happy about the EPS. The organization number is about 25.83 as against 4.15 last year. I hope this result excites you. And if you really want to understand how this has happened, let me tell you that our consistent focus on bridging the digital divide between banking and fintech world is where we operate. We have been continuously focusing for the last 10 years in building the processing engine. And today we are taking that not just to bank, but also, to the aggregation world. At the same time, we have been blessed with the tremendous increase in the industry, numbers, which has where I think you might have known that in UPI volume now is almost about 11 billion per month. And, the overall trend of the industry, if you look at, you must also understand that the consumer spending pattern is changing tremendously. There are more and more applications which is bringing a habit of online transaction, and people are more confident about security aspect of the digital payments thanks to a lot of robust and lot of decisions that were taken at the regulatory side. Furthermore, we are also seeing that there is a huge penetration happening in regional market where we have offline payment, growth coming in from QR and the similar setup required at the merchant side. All of this, along with our consistent, investment into R&D lab and new product strategy, has been the reason why we have been able to, drive this particular number. I believe that we will continue the same strategy going forward. Our focus now will shift towards capacity building of the organization, creating more and more leaders, investing into, capability and skill set, and remain focused on new product and R&D lab. So this is the overall, picture of your organization as on today. I believe this should be good enough to begin with. Kaushal, if you can open the Q&A, I can take it forward.
Yes, sir.
Hello?
Yes, sir.
Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, kindly note the duration of the call will be for 45 minutes. Our first question is from the line of Pratik Chaudhary from Samarth Capital. Please go ahead.
Yeah, Pratik.
Am I audible, sir?
Yeah.
Hello, sir.
Yeah.
So in the EGM transcript, there is some very interesting comments that were, discussed. And things like non-linear growth into FY25 and beyond were talked about. So could you give us some light into what are the levers where we can see that from, because there are multiple things happening. There's an API rollout roadmap that we have. There is international piece that we are looking at. There is a banking TSP side. So if you could, and there are these new products coming for us, ODR, BBPS. So if you could integrate all of that into our understanding as to where, and you also put that the organization will transform in FY25. So if you could give your thoughts on this thing.
Pratik, right?
Yes.
Yeah. Sure, Pratik. So let us understand that, we as an organization have taken a lot of effort in building the overall value chain, which is not just between the, building the solution inside banking ecosystem, but how do we take the solution out of banking ecosystem and cater to, merchant and payment aggregators in the market. Now, this is where, non-linear aspect comes into picture, wherein what we are building as an IP around the processing engine, we are able to take that forward in the market. And this has taken almost 2 to 3 years of consistent effort in technology and operations that we have so far invested. Now, when I say non-linear, what we are trying to do is we are creating products, not just remain on services. So although we are on service segment wherein every incremental cost has certain revenue added to it, at the same time we are trying to also focus and shift ourselves towards the product strategy wherein we have built the product once, and without having further cost escalation to it, we should be able to generate more revenue on that. That is what I mean by non-linear model. So we should be able to continuously scale that. It happens that over a period of time, in the product curve, the revenue per transaction, or I would say, the overall revenue starts going down. Then in that case, you're supposed to keep launching new products and new solutions, and that is what we do. So it is an ever-evolving curve wherein, this non-linearity actually pushes the EBITDA and the net margin. That's why you're seeing that the growth is not just coming around revenue, it is also coming around the EBITDA and the margin. That is what it is.
Right. So first thing, if you could talk about our Evoke business, and the opportunity size we have. So, what was the bifurcation of revenues that we got from Evoke business in this quarter?
See, we split it into 35, 65 odd usually. So all the service business, or I would say the license and SaaS-based model which we have for the banking segment, contributes to about 35% odd. Ashish, just correct me wherever, numbers are.
It's between, you can say 30 to 35%, and Evoke is somewhere about 65 to 70%.
Yeah.
Okay. And sir, where are we in terms of our API rollout? So we have heard about AutoPay, which was there in the transcript, to be rolled out in FY25. What other than that are we?
So technically and operationally, we have to build the stacks. So somewhere technically we are there for AutoPay and payout, and we are in the midst of building the operational capability. This is completely a different stack altogether. Our existing operations capability does not support the as-is model of, AutoPay and payout. So as an organization, we did not consider this difference. Again, we are trying to, make the right use of our knowledge and the industry benchmarking that we are doing. So we are on track, but maybe behind by a month or so, which we should be able to catch up. Somewhere this quarter itself, we should be able to launch it. And like rightly said, we should be able to generate revenue in FY25. No doubt about it.
And this is for both payout as well as AutoPay.
Yeah.
Okay. And in terms of opportunity size, since you said that these are two different stacks, I mean, pay in, which is your current primarily Evoke business, and these other APIs, the next one being payout and AutoPay. So, is there any is the opportunity size much
yeah,
bigger?
So no. So that we are yet to dig further. See, let us understand this. The overall UPI is about 11 billion transactions a month. Almost about 45% odd should be P2M transactions. Now that is the entire industry. Okay. Out of that, there may be certain transactions which would be coming in the aggregation business. We are not the aggregators. We are the technology partner sitting between bank and the payment aggregator, providing them the solution. Now there will be certain portion which we'll be getting. So we estimate that we should be, just about 0.1% of the market share, or 0.1 to 1.5% of the market share. It is only with the scale and, overall, wherein we will have to take certain business, decisions and strategic roadmap that will scale further beyond this. When it comes to AutoPay, obviously AutoPay is completely new product which will, which is more of e-NACH nature. Wherein if you see that whenever you go for a subscription-based model, or I think being one of the best example for you all to understand is mutual funds, wherein there are, subscriptions for which you require, products like NACH. Now, this is where AutoPay will start entering. this space. So we feel that this is absolutely new area to venture in, but very exciting. And that's why, we have kept the numbers estimated in FY25. We don't want to overcommit this particular quarter.
And so last we have spoken about cash free has been, have we onboarded that as our plan?
No, not yet.
Okay. And in your financial statements, there is a line item by the name project expenses for almost about 10 crores.
Ashish, you can.
Yeah, Pratik.
There is a line item project expenses. Can you explain that?
10 crore worth of...
Yeah. It's majorly a expense for Evoke, sharing with bank and other merchants. That's the major nature of this expense. That's a major portion of this expense. Sharing with bank.
Sharing with?
Bank.
As is a Cosmos relationship.
Yeah.
Okay.
There are multiple parties involved into it, so you'll have the overall top line coming in, and there will be cost associated with sharing, and then, third parties involved, merchants and all of that.
Right. And,
so it's a direct expense without, that does
that's
not...
For TSP business. That's for TSP business. We have taken manpower from the third party. That this expense is also covered that part also.
Yeah.
Okay, so it includes TSP part as well, and it includes the payment that we share with the
all.
Cosmos and other partners.
Any kind of direct expenses related to our revenue, it majorly comes under project expenses.
Okay. And in the international piece, any opportunity on the annual? Like you spoke about Asia, Middle East, and have we bid for any countries?
We are investing into these areas, but the cycle is much lengthier, so it will take time, Pratik. We haven't arrived there yet.
Okay. And in the EDM transcript, Bank of Baroda was mentioned, some 6 to 7 large master merchants, even new opportunities for Canara Bank. If you could, talk about.
So I'll explain that. In TSP business, like I said, the sales funnel takes a lot of time, but then it is a very robust and very strong revenue model, which plays in for a very long term. So, as per the approach, what happens is first you should get eligible and empaneled to deliver as per the bank requirement. So we were able to empanel into Bank of Baroda. We were able to empanel into Canara, Bank of Maharashtra, and I think these were 3 banks which I named, which we were able to do so in last quarter. Now, beyond this, as and when the opportunity comes in, we'll go for the bid, and then it will open the opportunity for the organization. And when it comes to 6 to 7 large merchants, like I said earlier in the call itself, that as a whatever businesses we are bringing in, in TSP we were able to add a completely new product altogether, and in Evoke we were able to add the new large merchants.
So for your 3-year vision document that you've been working on, any numbers you could give out as to what is your revenue target you are possibly?
Yeah, I can continue to give the guidance on how you should look at the market. I think if you have gone through transcripts, I have consistently maintained that, you should now start looking at because see, this quarter we were very, and as a management, we were really looking at how this should, pan out. Because what is going to happen now is we are going to work on the higher base, which started from Q3 last year. And that's why I tell everyone that if you see the growth pattern from Q1 of, or I would say Q4 of last year until now, I think you will get average growth rate of the organization, and that is what I have committed so far. I don't want to change any trend for now. Whatever the amount of opportunities or roadmaps that we are building in, we want to first build on it, ensure it's rightly done, and then I can, if at all there are any changes, I will share that with you guys. But for now, it remains the same.
Okay. This you also propose some revenue generation to current accounts with banks, some model, some product or model that you in the
Current
EGM
account.
transcript. Okay, sir. In the time pay thing, it speaks of payment system, prepaid instruments, and payment aggregators.
Payment systems. Go ahead. What is the second one?
Prepaid instruments, issue of
Okay.
prepaid instruments, and payment aggregator is what has come out in the presentation today.
I mean, it remains the same. I think when it comes to aggregation, we are providing technology and the overall solutions for them to operate as a technology partner to them. What we were doing for bank, we have come out and we are doing it for the payment industry. Fintech industry. As in when we go further, there will be more and more value-added services that we will keep on adding. And wherever we see the opportunity that, let's say, there is a revenue of, let's say, 1 paise on a particular transaction, which gets added by bringing in, more VAS service. That is what we will be doing. So, in what context are you referring to this? I am not able to recollect that. If you can maybe give me more detail about this. What do you mean by
my understanding was that time pay was, since we are a TPAP, and
you are referring to the mobile app.
Yeah, the time pay thing.
There is a payer fees that we earn usually. So we like I said earlier also, as a mandate we have to invest into the payer transactions as well as a TPAP, because we are holding the mobile application, which should be operational in market, and that is what we are investing into it. But when we invest into it, there is always an opportunity to generate revenue out of it. And this revenue can be in form of payer fees. It can be in form of bringing in merchant in the ecosystem whenever we bring more users into space. So these are certain areas where we will be generating more revenue when we launch the app as well. But then it will also, require investment into bringing in users in this space. So I think this was related to the TimePay mobile app, if I'm not wrong. So when we do the investment in the app, we also see the opportunity to generate revenue through some other sources. Okay.
No, in the incorporation of the subsidiary slide, where you have incorporated TimePay Digital Infotech, the line says that the subsidiary's goal is to also act as a payment aggregator and issue prepaid instruments.
So I will tell you the use case.
In the sense that would we be going ahead to apply for a license, a payment aggregator license? That's what my question.
No. So I'll tell you what. When there is a need, so when we have not taken that decision. Okay. I'll tell you what happens, like I can say, okay, I have understood what you're asking. So there are more and more ways to generate revenue when you launch a certain product. Again, there are value-added services which can be brought in. So when you're bringing in a user in the application, what happens is like prepaid instrument. So if we are able to tie up with the right party who can actually provide the wallet-based services to the same user base, it actually generates business for them and revenue for us. At the same time, if we are able to, tie up with the aggregators, payment aggregators, when we have more and more user base, we are able to generate certain revenue from that sources as well, because we are bringing in business for them. So as a user, since I hold a user base who will be spending through TimePay, there is an opportunity to make money from the merchants and those who will be utilizing our platform to sell their services to the users on the platform. So it can be through prepaid instruments, it can be through payment aggregator.
Sorry to interrupt. Please limit your question to 2 per participant. If you should have a follow-up question, we request you to rejoin the queue. Several participants are waiting. Okay?